members, it is my pleasure to welcome you at the end of this challenging year, which was really very dynamic for our AmCham, with more than 100 events, intensive work of our committees and task forces, with several unexpected projects like 3 sets of recommendations for economic relief or a document for a resilient tourism in Central and Eastern Europe. A special thank you for supporting us, for participating at the AmCham events and contributing to our policy work. For closure of this year, we have invited Mr. Daniel Lenardic, a partner in KPMG, to sum up key learnings from this year and share with us his view on 2021. We have also here with us today His Excellency W. Robert Kohorst, who is ending his 3-year term in Croatia and who had a remarkable mandate with several great achievements important to US-Croatian relations. We should conclude the year with holidays greetings from our President on behalf of the AmCham board. Allow me now to invite Daniel Lenardic to take a look back and see what we can learn from the challenges of 2020 and what to expect in 2021. After Mr. Lenardic's speech, we shall open the floor for your questions and comment chat, or you can also raise your hand to get the word. Daniel, the floor is yours.
Thank you. I'm going to share my presentation, so please just let you can see it full screen.
Vidimo, samo još nije full screen, ali se vidi.
Treba bi biti. Okay, obviously there is some delay, so please let me know if there is a problem with switching slides as I go. So, good afternoon, everyone. I'm Daniel Lenardic, partner in KPMG, leading management consulting function here. So I will give you a brief macroeconomic overview of Croatia versus EU and some other global regions in 2020 in the light of the corona pandemic, as well as some macroeconomic outlooks for the coming year or two, and our view on the topics related to this, which will be driving economic trends in Croatia in the coming years. So, I mean, as a short introduction, it's obvious that this pandemic is being felt by businesses globally and presenting us with a number of challenges, from keeping our operations, people and customers safe, maintaining liquidity in the environment of a significant drop in sales and revenues, reorganizing operations in the light of difficulties we are facing, cross-border traffic and also physical movement of people and goods, as well as trying to ourselves in terms of understanding how to utilize relatively new complicated government support programs that are becoming available to many businesses. In light of this, these are the short-term challenges that will drive clearly this winter and coming spring season, but also for many industries and sectors after that period, things are not going to return to the way they were before, and we will feel long-term impact of this pandemic in basically restructuring certain industries. And this is basically the enterprise reboot or reset that is the title of this presentation today, because this is something we see as a hard reality for some industries or regions that will need to really rethink how they are doing their business in terms of basically facing the new reality. If you look at some economic forecasts, macroeconomic forecasts, here we have the UK National Economic Research forecast from April, the moment that the pandemic started, which is the green line we can see on the graph, and we can see more recent KPMG macroeconomic outlooks, the base, the central case, and for example the downside case. What is interesting to see on this graph is how initially we thought that this epidemic will have a deep short effect, with global GDP dropping more than 10%, so this would be more like 12 to 13% in Q2 2020, with a quick return to pre-crisis levels, which is Q4 2019 GDP levels by the end of this year. This was the initial macroeconomic assumption. Clearly, the drop in global GDP that we can, of course, now measure in Q1 and Q2 2020 has been a bit less than that, 10.5 to 11%, but the recovery will be quite a bit slower than initially expected. And as you can see here, the KPMG expectation is that globally we will return to the baseline of Q4 2019, either in mid-21 or in late 21, depending on the scenario. But when you look at overall in perspective, global economy, global society is making a huge, strides of development. If you look at the last 100 years, we see how the poverty levels have dropped, child mortality levels have severely dropped, while literacy and education has increased. So such crises as this one are a bump in the road in terms of long-term outlook for the human society and economy overall. If you look in the longer and look at this from a country level perspective, there are certain, let's say, worrying trends. So, for example, if you look at 25 years of development, 1990 to 2015, we look always at round year numbers. So 2020 numbers we will see sometime next year. We can look at economic inequality index, the Gini index. You may not notice Croatia here on the map, but actually Croatia is somewhere here close to France, or between France and a few countries further up this line, where our Gini index is around 30, and it has barely moved between 1990 and today. We see some countries have actually decreased inequality, and some countries, and what is interesting, the developed countries have not really improved economic inequality within their societies in the 25 years under review. Actually, some of them have worsened it a bit, as we can see here, the example of Germany or the US, or even Norway, Finland, Sweden, some developed countries. So if you look in the long run, this is a year we will probably want to forget, and it will take us a few years to recover, but overall it should not have a long-term detrimental impact on economic development. However, when we look more precisely from global to regional or country level and sectors within countries, this is quite different. If you look at the example of one country, which is China, where this all began, actually we can see that the effects on China in terms of exports or foreign direct investments, actually China has outperformed the global trends quite a bit, as we can see that they have not experienced drops compared to huge drops, both in exports as well as in FDI on the global scale. However, consumption in China, similar huge drops as compared to most countries. So it appears that, for example, problems of a country like China are more internal than global trade effects if compared to some other countries. Furthermore, if we look at how governments are reacting to Corona, we can see that fiscal stimulus measures in different countries, what has been announced so far, and things are moving definitely, it's very different. If you look at the US, the fiscal stimulus measures announced so far are roughly 14% of the annual GDP, while in Italy or Germany it's over 1/3 of GDP. When we look through this presentation, we will see that it is not really clear whether the amount of fiscal stimulus measures helped in terms of let's say, softer landing of the GDP or lower drop in GDP numbers on an annualized basis. Because if you look Germany and Italy, the drop in GDP is that Italy actually had a double the drop of GDP in percentage points than Germany, with similar fiscal stimulus measures applied. The UK is also one of the worst hit, or France worst hit economies compared to some others. So the effectiveness of government measures in short term are difficult to judge, and in the longer term, then we can see a little bit more what is going on. If you look at Croatia, the measures announced so far are roughly on the order of 7% of GDP. So we are locally definitely not one of the countries that announced a huge package of measures. This might change with some funding becoming available in the coming years, but what has been done on the local level from the local budget is relatively moderate compared to some of the countries on this list. If you look at the global free regions as economic, let's say, regions, we have the Asian Regional Economic Partnership covering a number of countries, so 15, including Japan, Korea, China, and many others. Then the EU, of course, and the USMCA free trade zone. What we can see is that the GDP growth rate below, it appears that the expected average growth rate in the next 5 years will be basically half of what it was in the last 5 years. So there will be a hit on GDP growth on average, but clearly this is driven by the drop in GDP in 2020. The growth rates in 21, 22, 23 will actually come much closer to historical rates, but the effects will be felt over the next 5 years, the deceleration in economic growth. Much less impact is expected in Asian countries, and we can reflect on that later. If we return to the KPMG global outlook and just focus on Europe, we can see that we have possibly 3 groups of countries in terms of the severity of the GDP impact that happened this spring. And if you look at countries with really above 10% decreases, it's led interestingly by Scandinavian countries, UK and the Czech Republic. If you look at other Eurozone countries or traditional, let's say, core of the European Union, the average is about 11%, but the dispersion is quite big. So we see smaller countries, for example, the Baltic states or Mediterranean countries being harder hit than others in the Q2, but also recovering quite a bit faster in Q3 of this year. And then we have developing Europe countries where actually the effects were the most severe, but also the recovery in Q3 was better. If you look at this, we can see that longest effects will be in Mediterranean countries and the UK. So Portugal, Spain, France, Italy, Greece, including Croatia as well, mostly because of the longer term outlook on the travel and tourism industries, which are significant proportions of GDP in these countries. And therefore, countries that are in the southern zone of Europe will have a longer and slower recovery than others. And this is something that will also hit us quite a bit. If you look at Croatia and compare it with other countries, we are now moving from the KPMG macroeconomic outlook to the European Commission Director General for Economic and Financial Affairs, their autumn 2020 economic forecast. The expected annual drop in GDP in Croatia is 9.5%, 9.6%, and recovery in the coming years is a bit less than 6% in 21 and a little bit less than 4% GDP growth in 2022. And this taken together means that GDP from 2019 will be reached again sometime in late 2022, which means that we will have a 3-year period of recovery to pre-crisis levels. If we compare this to other European Union countries, actually Croatian drop in GDP is a little bit better than one expected in Italy or Spain or the UK or Greece, but we are a bit below the EU average of 7.5% drop, with a bit faster recovery than the expected European Union average of 4% in 21 and 3% in 22. So in general terms, Croatia will be hit a bit harder than average compared to the others, and will recover in line with the others, reaching the GDP levels of 2019 within 2022 timeframe. If we look at unemployment rates, inflation rates, current account deficits, or budget balances, actually Croatia, with the exception of current account deficits, which will be quite high than before due to expected slow recovery of tourism, which is one of the key exports in Croatia, or the key export. Otherwise, it is expected that our fiscal framework will remain stable and much better than some other, especially Mediterranean area countries within EU. However, if you look at the Croatia in specific, or the New Europe in specific, and EU in general, compared to the US economy, Japan, world economy, or China, Europe appears to be hit much harder and will recover quite a bit slower than the other global regions. And this is something to be worried about. So if we go area by area of the economic forecast, we can see that the GDP drop in Q2 2020 compared to Q4 2019 was the worst in the European Union area. So it was the worst drop was only in the Spain, France, Italy, and Portugal countries. So we were hit fast and hard. The recovery of these countries was a bit also better than average in the other quarters this year, but still the hardest countries include ourselves. If we look at the expected movement of GDP in the coming years, we can see that actually Croatia will be barely close to 2019 GDP by the end of 2020, while some other Eastern European countries like Hungary, Poland, and Romania will actually exceed that GDP quite a bit by that time frame, or Ireland or the Baltic countries. Which means that we will recover more slowly than some of our Eastern European neighbors. And the main reason for that is slower return of exports, where this gap comes from. So domestic consumption is actually expected to return quite quickly, but the fact that Croatian economy so much depends on the travel and tourism industry means that our recovery will be slower and impeded by that, as these are the industries that will face a hard reset and long-term restructuring needed to face the new reality and change in consumer behavior. If you look at unemployment, actually Croatian unemployment rate in 2019 was around 6%, a bit over 6%, and it's actually expected to be in the area of 7 to 7.5% throughout the next 3 years, which means that looking at the average of the Euro area, we are definitely below the average, so this will not be the main challenge of Croatia. Some sectors may face this differently, but clearly compared to rates, for example, the red graph is Spain. This is less to be worried about if you look at the countries like Spain, Italy, France, or similar ones. And also, if you look at the budget balances, Croatia is actually among the countries, meaning that we will have a significant budget disbalance in 2020, which is the gray graph. But even there, we are in better countries in Europe. And this budget imbalance will relatively quickly revert itself to 3%, let's say, border which is acceptable, the European Commission, while many other countries will not be able to reach the 3% threshold within the next 2 years. So fiscally and unemployment levels, it appears good compared to other countries, but exports and GDP effect of tourism exports will be longer. As I mentioned also, in terms of budgetary impact of COVID measures, it's relatively moderate compared to many other countries as a percentage of GDP. And so far, it means that there is space for government to increase its support, but still remain within the budget limits expected, or what will be the new average of the Union. In terms of government debt, Croatia was a bit worse position, so not terribly bad. It was close to 90% of GDP 3 or 4 years ago. Then it dropped close to 70%, a bit over 70%, and now it will return closer to the 90% limit and stay there for the next few years. So basically, Croatia is somewhat middle of the pack compared to most European countries in that regard. What is clearly worrying is the dependence on tourism of Croatia, where we had a roughly 50% drop in tourism revenues, both in terms of nights spent as well as contribution to GDP or the actual revenue numbers. And if look at that, this is the most worrying graph here. So Croatia was historically by far the most exposed country in European Union to tourism, with roughly 18% of GDP directly or indirectly depending on tourism exports. The hit on tourism, as I said, was basically halving the revenue numbers this year, and recovery will be much smaller than in many other sectors, or much slower. And that means that the effects of this will be felt quite a bit in the long term. We were in GDP as well as in tourist nights spent per capita very exposed. In terms of drop in the nights spent, what was interesting to see is that, of course, when we look at tourism numbers for Croatia, we experienced a bit lower drop in domestic tourism revenues and nights spent than, of course, in foreign, compared to some other tourist countries. But still, the return on foreign tourists and their revenues to Croatia will be a problem going. So if you look at the European economic forecast for next years, it appears that, as you can see from the graph on the right side here, that private consumption will recover quite strongly in 2021 and 2022, the moment that lockdown measures are relaxed, and we hope that vaccination will have a huge effect on that. Public consumption, which had a significant increase this year, is actually expected to grow much more moderately in the coming years. And the main challenge then is how quickly we can recover the export of goods and services here. The expectation, as we see here, are mainly driven by GDP effects of this, while other economic indicators appear more in line with other European countries. There are other effects than purely economic effects on our region, and some of these could be political stability. We are neighboring with a number of other former Yugoslavia countries, where actually what is interesting to see is how the problems post-COVID crisis will make Europe a bit more inwardly focused, and what will happen with the expansion or extension of European Union to other Southeast European countries, and what is the appetite of these countries for this. These are important trading partners for Croatia, both in terms of supply chains connections as well as markets. And most of these countries were hit actually equally hard by the COVID crisis, although they were less dependent on the tourism sector. They had a bit weaker economies and exposed in terms of exports to Europe. So what is interesting to see is how this pro-European Union and pro-accession motives of these countries and their economies will develop in the coming years as well. As we had in some of these countries, it appears that political stability in them is a bit under pressure. What can companies do to cope with this situation? Well, one thing is that we can say that we have 4 stages of coping. So one is reaction, quick response to crisis and lockdown measures, basically focusing on maintaining operations in the short term. The second phase is resilience, meaning how to maintain operations and survive in the environment of much lower revenues. So how to preserve liquidity and let's say maintain customer and partner relations during the next 6 to 12 months. And then we will probably focus on the recovery. So how to return to growth and scale up the business back to normal over a period of time in the next 18 to 24 months. And also at the same time in phase 4, adapting to the new reality for industries. We cannot expect a return to business as usual in the midterm. And the effects in each of these phases will be pandemic, meaning health related and basically government policy related measures. They will be economic, and there will be also business strategy, portfolio of services, and how we approach. So most businesses will be having to think about within this matrix of phases and transitions between those phases. And they face some changes in consumer trends. So new ways of shopping, trust in brands, companies, both in terms of consumers or buyers, as well as suppliers, partners, banks, and employees. More complex working environment because there will be more focus on health and protection of employees, but also consumers will be more focused on understanding from this pandemic how health and life is fragile, and this will have a huge effect on social changes in the midterm. And then, of course, pressure on wallets and available spends and more savings and reserve building focused way of social thinking, which will impact the business in many sectors. If you look at this from a sectoral perspective, we created here a view of potential scenarios. So there will be industries that will face a hard reset. So they will struggle to recover from the corona pandemic because of permanently or mid-term lower demand for their offerings, hard hit by a recession, also not having enough capital to ride out extended depressed demand. And these are industries that were historically poor at digital transformation, or actually digital transformation and adapting business relationships is difficult in those industries. Clearly, this includes any tourism-related industries such as hotels, restaurants, entertainment venues, airlines, also traditional retail stores, and some other sectors. For them, they are facing longer-term financial and operational restructuring, and they will face the problems of corona for the longest. The problem, of course, is that these industries are a significant part of Croatian GDP. If I go to the other sectors, there are sectors that will surge. Media, telecommunications, pharma and life science industries, IT in general, online retail, private equity and asset management firms for whom the financial restructuring opportunities or challenges to certain industries bring opportunities to invest into assets or consolidation of sectors that are under economic pressure. That means that M&A restructuring, debt restructuring activities will be much in focus. So these industries will have a surge in the coming 2 years, both in employment, participation in GDP, and market share growth. For them, actually, it's more about riding out the short-term effects and then trying to scale aggressively during recovery. They will also need to build capital or raise capital. The third area are transform to re-emerge. So industries that will likely recover, but they need to endure the short-term pressures. And these include goods industries, automotive, industrial manufacturing in general, insurance, professional services, construction industries. So they actually will return to normal, but they need to ride out the financial pressures they face. And when they return to normal, their changes to business models will be relatively limited compared to the first two that I mentioned. And businesses that will be business as usual, but with some modification, because they are seen as daily essential industries, and they will recover quite quickly with a return to similar volumes of business and similar business models. Mainly this means food and agriculture, consumer goods, logistics and transportation industries, which on one hand will focus in some cases more on delivery to end consumer rather than delivery physical point of sale, but they will return with their volumes to normal quite quickly. And banking as well, which will face some non-performing loans challenges and decreased demand for certain products, but basically they are already well along the path of digitalization and should return to normal relatively quickly. So if you look at these sectors from the Croatian point of view, unfortunately, we are not the strongest, apart from domestic consumption, but not the strongest regional player in that will surge. And this is a bit worrying. The bottom two industries that will re-emerge or do business as usual will recover quite quickly with domestic consumption, clearly. And then the hard reset industries are where we will be actually facing challenges in the longer term. And we believe that the focus of government policy as well as economic transformation that should occur is that tourism is reaching a bit of a saturation point in Croatia for the reasons also here of these changes due to economic pandemic, but also because tourism was the industry that kept us afloat during the previous 2009 to 2014 economic crisis, because tourism was growing throughout this period and its percentage of the GDP actually increased compared to 2008 and before periods, meaning that Croatia was being less and less industry focused and more tourism and services focused in the period. And this is a bit catching us in an imbalanced state of economy, which we need to rethink. In terms of short term, every company will need to react to what's going on, maintaining liquidity, maintaining supply chains and customer relations. But then after the 3 to 6 months remaining period of hard, say, lockdown, they will need to see which recovery path their sector is likely to take and what does it mean for the company in that sector, being either a leader even in a and trying to leverage the opportunities of problems competition faces, or being in a sector that will recover more quickly, and how this recovery and return to growth can be realized. So this is the short introduction to what we see can be expected in the coming years. And I think I can conclude the presentation part for today. And I think I'm open for some questions now.
Thank you, Daniel, for a really enlightening presentation. Let's check whether we have any questions from the audience. Seems not at this moment, even though we can convey and send compliments for the presentation. People are interested in the opportunity to get it and maybe see the details. We see the structural problem of Croatian economy. Is there anything else that you would emphasize as some of the key drivers that could help Croatia to overcome the effects of COVID pandemic?
I mean, if we look in general, I would say that Croatian economy, apart from tourism and a few other niche sectors, is not internationalized enough and not integrated enough with Western European countries. And that is a bit of, it was a challenge in growth, because we were not, really globalized economy or one component of a globalized economy. That's something that we need to rethink. I also think, apart from a few sectors like the telco and financial sector, Croatian companies were hit quite a bit hard by the previous crisis 10 years ago, and the profitability of many sectors never really recovered to pre-crisis levels, which means also that product portfolios of consumer goods companies, especially, for example, were not refreshed in the last 10 years. And we definitely, apart from these few sectors driven by high tech, did not invest enough in digitalization and automation in many sectors. So this crisis is actually facing us with the challenge that tourism will no longer be the driver of our economic growth. And other industries, especially manufacturing, so whether food or durable goods, have not invested and kept pace with modernization that globally is expected. So what that will mean? Probably it will mean challenges in the short term, privatizations and M&A activities in the midterm to basically consolidate industries, sell them to foreign investors who can then invest better than we can. But yes, looking sector by sector, challenges are specific. Even looking at the banking sector, European banks actually never returned to 2008 profitability levels, unlike US banks, for example, because they were not able to reduce their costs in line with the consumer preferences of doing their banking business online, which is very interesting. The decreasing interest rates and digitalization, European banks were just not able to reduce their costs. The same goes to quite a few of other Croatian sectors, and this is now, I would say, presents quite a bit of challenges. To delve into more detail, we would need to go into specific sectors.
Daniel, we have 3 questions. I would ask you for very brief answers. Ambassador Kohorst first, Mr. Vlad, and Mr. Blažić.
Thank you, Andrea, and thank you, Daniel, for your comments. I have 2 questions. One is, what effect is this pandemic and the economic crisis going to have on Croatia entering the Eurozone, adopting the euro here? And second of all, give me your best estimate on what is the best industry sector to invest in over the next year.
Okay, thank you. So in terms of Eurozone accession, so we have started this fall the mechanism for euro adoption. Croatian financial sector, so banking sector, is actually currently facing hyper liquidity. It's very liquid. The problem of the banking sector in Croatia is that actually there is more cash than demand for loans currently. And this will actually be the fact of life for the next couple of years, because there is just enough investment demand currently by corporations as well as consumers for banking funds. So we can see that macroeconomic indicators of Croatia in terms of budget deficit, liquidity in the banking system, indebtedness of the government as well as the general economy are comparable to average of the European Union. So I believe that the euro adoption will go on as planned. Perhaps maybe not in the next 2 years, as is the optimistic plan to adopt euro, but in the 3 to 4 year time, I don't see that this will be endangered by the corona. Actually, for Croatia, there is every benefit to do it as quickly as possible. In terms of investment opportunities in Croatia, I would say there are many sectors like food and traditional food retail sector that were already hit by the Agrokor restructuring, sectors that are, as we can see here, modified business as usual. So sectors that will recover, but they were under pressure in the last couple of years and they need to consolidate. And the privatization or the M&A in this sector probably is something that will continue or that will actually, happen. So that's one area. In terms of restructuring of other economic sector, the problem is the SME or small and medium-sized manufacturing, which is the staple of, let's say, larger Western European economies around us, like Italy, Germany, France, Austria, and so on, where the biggest worry is, will these mid-market companies have enough access to capital and to bank loans in this new environment of very cautious lending and very difficult access to capital to grow and drive growth and proportion of this industrial hard durable goods manufacturing in the proportion of the overall economy. This will be the bigger challenge. And if you look at the surge industries, probably there will be some growth there. The question is that this base of companies in Croatia is relatively small. So I would say individually we will see more and more IT industry investments and growth. Some media industry, as you can see already, there is US funds like KKR buying companies like United Media, Telemach, Tele2, and so there will be a lot of M&A in this sector and growth, but I think this, compared to overall Croatian economy, will not move the needle enough to make for the longer-term tourism challenges. If you look at the real estate, I think more will happen on the government side, which has the opportunity now to, which they should have done maybe a decade ago, to privatize a lot of remaining state assets, meaning not only companies, but even more property-related assets to support the budget deficit in the coming years. The question is, real estate funds and asset management companies, how aggressively they will pursue this market. But this is an opportunity as well because of the expected, let's say, depression of real estate prices in the short term.
Thank you, Daniel. Mr. Vlačić, do you have a question? It seems not at the moment. Then Mr. Blažić. Jelena, can you please unmute Mr. Blažić?
Hello, can you hear me?
Yes.
Yes.
Hello, everybody. Once again, I would like at first to congratulate Daniel for the really comprehensive and excellently structured presentation. It was very clear messages. I think that we learned a lot from it. Regarding my question, it was in between posted quite similarly by Ambassador Kochorst. So I will little bit modify my question. What do you expect, Daniel, in the next year in terms of the capital markets development, especially in Croatia and in the region? We have seen, of course, that investors basically they if I may so they don't care about COVID. they care about their investments, obviously, and then they try to find best resource for the investments. In that light, how do you see development of the capital markets overall in the region and in Croatia in the next year?
Well, I mean, if you look at the Croatian capital markets, so the Zagreb Stock Exchange, we listed about 115 companies on that market. This is a very small proportion of the Croatian economy, and of these 115 companies, maybe actively traded is a third of them, not much more than that. So I would say the capital markets in Croatia are not liquid or large enough really to drive economic development. New listings on these capital markets, it's something that was the trend in the 2019 for sure and before. So we had new listings. The overall volume of trading was depressed mainly because of Agrokor companies which were listed there, whose trading stopped with the Agrokor restructuring. So in the short to midterm, I don't think that capital markets in Croatia will play a huge role in terms of driving capital raising in the Croatian economy. For that to happen, there would need either to be a government intervention, for example, which we had in Poland 6-7 years ago, where basically the government did two things. They forced the national pension funds to invest a proportion of their assets into listed companies, which in Croatia, the government so far was actually, in a way, not really more preventing than pushing pension funds to participate in capital markets. And secondly, the government then said for any which wants to raise capital from the pension funds, it needs to be listed. And just to give you a feeling, in 3 years between, I think, 2014 to 2016, Poland listed something like 600 to 700 companies with more than 2 billion euro or 3 billion euro of equity from pension funds raised. So such government intervention could mean that capital markets will become more active. Another way for governments to promote capital markets is to privatize remaining large state-owned enterprises through the stock exchange rather than a sale to a strategic buyer. Whatever happens in that sense will mean, number one, that capital markets in Croatia will grow, more listings and more trading, because trading was very depressed 17, 18, 19 because of Agrokor and low liquidity in general. But still, the amount of trading on Zagreb Stock Exchange and capital raised through the stock exchange is a really very, very small proportion of the Croatian economy. And access to capital in times of depressed lending and more conservative lending policies by banks is a challenge to grow, especially in the mid-cap companies, which is these transformed to re-emerge sectors, typically the bottom left of this graph we still have on screen. So I would say capital raising is a problem of Croatian economy, not only for big companies, for mid-cap companies as well. There is very little private equity activity in mid-cap, very little M&A activity for companies to merge and pool resources in mid-cap. And in general, Croatian entrepreneurs are individualistic. Very few Croatian startups or mid-sized companies are owned by a group of people, partners and friends who started the business together. Mostly it's one person or one family, and that limits growth because one person or one family has limited capital assets to reinvest in business, and less capital means less lending capacity, means slower growth. And Croatian businesses were not growing aggressively enough and internationalizing themselves aggressively enough. And this was preventing our industrial growth compared to tourism or public sector.
Thank you very much, Daniel.
Thank you.
Great presentation. I'm sure we could discuss this topic much longer, and certainly we will open more opportunities for that in the new year. Thank you for now. And it is a great honor that His Excellency W. Robert Kohorst, a great friend of Croatia and our AmCham, is here with us today. I would invite you, Your Excellency, to share with us your experience of past 3 years in Croatia.
Thank you, Andrea, and thank you for all joining us on the call today. By the way, just in case anybody's curious, I have my Christmas sweater on because it's the Christmas time of year, and we got to start getting in the spirit. This lockdown is very disturbing but necessary, and we all need to do our best to celebrate with our close families. I've been here 3 years now, and it's just been a terrific experience for me personally. It's been a real honor and privilege for me to represent my country in such a nice place as Croatia. You know, and I'm really glad that our embassy has been able to accomplish some of the things that were important to the U.S. government and also important to Croatia. You know, before I came to Croatia, the State Department told me my number one job was to help Croatia build an LNG terminal on Kirk Island. It had been in the planning stages for 25 plus years, and it was kind of time to bring it to a conclusion. And you know, I'm really thrilled to see that the government took some really courageous steps to put up you know, 100+ million euros along with 100+ million euros from the EU, and the project's going to be completed in January. It's going to be great for Croatia, great for the region, and I think Croatia is going to find out it's going to be a big economic success also. The other two topics that come up all the time, which we're thrilled that we're making progress on, is the double tax treaty and the visa waiver program. With visa waiver, the big hurdle was getting below 3% on the refusal rate, and it's Croatia really focused on getting that number down and achieved the goal. On September 30, they were substantially below the 3% level and are moving forward. There's now some documents that need to be negotiated, but they're in process. An air marshal agreement has already been signed. We've signed a memorandum of understanding on the passenger name recognition protocol, where all the airlines have to provide their passenger names before flights take off. It's a little complicated. There are 150 some airlines that could do business in Croatia, and trying to get signatures from all of them takes a little bit of time. But Croatia is focused on it, is working hard. Our Department of Homeland Security is enthusiastic when I talk to them to get this done, and I think it would be very short time before it's completed, but for the pandemic. But it's going to be a little longer, you know. But I'm hopeful in the end of the first quarter, second quarter maybe, it can be finished. On the double tax treaty, again, Croatia for years had been asking for negotiations to begin. Our government finally was able to appreciate the partnership we have with Croatia and the ease of which this can be done. So we just needed to prioritize it. It was something that was on the list of projects for our treasury, but they needed to prioritize it because Croatia is a small country. But they've done that. A draft of the treaty was given to Croatia. They've given comments back to Treasury, and I think they're very close to finalizing the language. The next step is our Internal Revenue Service has to review the treaty to make sure there aren't things that negatively impact our Internal Revenue Service rules. And then it goes to translation, and then it goes to signature, and then both of our governmental bodies have to vote to approve the treaty. So that's something that is moving forward. Again, the documentation will take a little bit of time, but I don't see any structural problems in either the visa waiver or the double tax that would cause these things not to happen in the short run. You know, on the military side, we continue to be great partners. You know, in the last couple of years, we provided a couple of Black Hawk helicopters. Croatia bought a couple more. So you're building out your airlift capabilities on the helicopter side. A number of years ago, we delivered 120 MRAP mine-resistant trucks, big heavy-duty trucks, which have been part of the Croatian military since then. And we're just concluding an agreement to deliver about 60 Bradley fighting machines, which are big, heavy kind of armored personnel carriers. And along with donating those to the Croatian government, we're going to contribute about $50 million of refurbishment cost. Croatia will put in another 50. The work will get done, I believe, at Đuro Đaković, so it'll create jobs in Croatia, and it will lead Croatia to building out a mechanized brigade, which is one of its NATO capability targets. So that's a big success. Of course, we're also excited of the opportunity to sell new F-16s to Croatia. That's in process right now. The committee is putting together their recommendations. They may have already delivered them. It's obviously it's a confidential process, but we're hopeful that Croatia will pick new F-16s from the U.S. because we believe those planes are the best value, are the lowest lifetime cost, and are not just a sale or a purchase of an aircraft. It's a partnership with the United States, which has been here as a partner for Croatia for more than 25 years. And we hope that goes into the analysis on the best product to buy is the partnership with the U.S. And we were there 25 years ago, and we're not just showing up at the last minute to make a sale. We truly value our long-term partnership with Croatia, and no matter what decision's made, we'll respect it. It's a sovereign decision by Croatia, and our partnership will move forward in continuing positive ways. So we'll certainly respect whatever decision Croatia makes on fighter aircraft. We've also signed a number of other treaties. We had an extradition treaty, which was last amended in 1909, which needed some revision. After a number of years, it was finally concluded. We've got some other treaties that we've done, and it's just been terrific. Everywhere we turn, Croatia is cooperative. We think we're a good partner with Croatia, and we want that to continue. So anyway, I'm thrilled. My mandate, I volunteered to represent the United States for 3 years, and that 3 years is up in January. And my wife and I are headed back to Southern California. We have 2 kids and 2 grandchildren, and we're very much looking forward to reconnecting on a daily basis with our family and our friends in Southern California. But we will miss the people we've gotten to know here in Croatia. It's been a wonderful experience for me personally, and we're going to miss our family, our friends and colleagues here in Croatia, and we'll certainly come back to visit. Andrea?
Thank you very much, Your Excellency. Thank you for everything you have done. Let's open the floor for questions. Some email. So what would be the key qualities that you would recommend to your successor to keep working and focusing on?
For my successor would be to make sure we finish what was started on the double tax and the visa waiver. It's not going to happen in the next couple of weeks. So everybody in our embassy is focused on it, and hopefully that enthusiasm will continue, and a real focus on getting things done. Quite often in government, the process overtakes the result. And one thing I really have tried to impress upon our embassy, which they've embraced, is getting things done is very important. So I'd like my successor to focus on that. And then second of all, would be to continue to push on the economic side to do more business between the U.S. and Croatia. Croatia is getting better. It's getting easier to do business. It's not where it should be eventually, but it's making progress. And I really would like to see a better program where U.S. companies can come to Croatia and look at opportunities. I know our Undersecretary of the Economy, Keith Karch, is putting together a program to try and bring American companies to foreign countries so that they can understand what the opportunities are and make some investments. So I hope my successor will really embrace the economic opportunities, both investing here in Croatia, making sales in the U.S., and continue on that economic process.
During your term, you have been very supportive to really improve the business climate in Croatia. But what makes it stand out business-wise compared to other countries? There is a certain noise
Yeah, unfortunately, you're cutting in and out a little bit. I think you asked me what's the difference between Croatia and other countries, and if that's the question, Croatia just needs to continue along the path it started into better judicial reforms, less bureaucracy. Joining the Eurozone will be helpful in terms of tourism and other investments. I think Croatia is heading in the right direction. The government needs to push reforms faster, shrink the size of the government, do things that they are doing, but do them faster and more aggressively. And I think investors will come if they do that.
So your support today and hope in Croatia privately. And I would like to invite our president to help us.
Thank you.
Ruža, the floor is yours. You can unmute.
Thank you very much, Andrea. Thank you very much, Your Excellency. And dear AmCham members and friends, dear Ambassador Kohorst, it's my great pleasure and honor to be here with you today, sharing these moments of the reflection as 2020 comes to a close, and we are eagerly welcoming 2021. We wanted today to take a step back and reflect on the year behind us, at the same time optimistically also looking into the future. Although this year has tested and challenged us in ways unimaginable, I'm incredibly proud of all that we have accomplished. On behalf of the whole AmCham team, I want to thank each of you for showing resilience through the twists, turns, and uncertainty of this most challenging year, while remaining committed to AmCham purpose and its values. None of this would be possible without our members, without your support, and also none of this would have been possible without AmCham team led by Andrea, for which I am incredibly grateful. Our sincerest thanks and appreciation is extended also to you, Your Excellency, for the ongoing partnership and the heartfelt support that you have shown us. For this, we are deeply grateful, and we only can say that we are looking forward to welcoming you again in Croatia, at least privately. In this year of the unprecedented change, we have learned to feel hopeful, having seen time and time again the power of persistence, support and care we have shown for each other. With the same feeling of hope and togetherness, we are welcoming the year ahead of us. Last but not the least, as the holiday season approaches, I would like to extend my warmest greetings to you and your families. I wish you all a happy holiday season and the best wishes for a brighter and healthy 2021. Thank you very much. Andrea?
Thank you very much, Ruža, for kind words and greetings. We are coming to the end of this event. Thank you for being with us. I would like to conclude again with sincere and warm wishes for a private and business successful 2021. Stay healthy, get some rest over winter holidays, and hope to see you soon in January. Thank you very much.
Thank you. Bye.
Bye.